Hey guys, Mike here. So today we're going to talk about Palantir stock and SOFI stock news that came out this past week. And don't forget, we got earnings Tuesday and Wednesday. So this is a big week for both these companies here. And so we're going to go through the charts as usual, what we did last week, what we expect this week. Going to go over anything to expect on the earnings and what to look for, which is going to be critical. And then I like to bring you guys as many sources of information as I can, independent information. And so I got one for SOFI for you, which will also give you an options play as well if you want to do that. And so let's not waste any time. If you're getting out of it, hit the like and subscribe button for me, guys. Really appreciate that. Share the video. And we got a lot to cover, so let's get right into it. All right, guys, we're starting on with Palantir's chart. You can see we're still on this upward trend line, which it definitely respects. Really just traded sideways all week. Once we did the pop, only about 1% for the whole week once it came down. But again, bounces off that upward trend line. It really likes this trend line. It's bounced off, I think, like 7 times. Off of it, you got 1, 2, 3, 4, 5, 6, 7 times, yeah. And so it definitely respects it. We keep moving up on that. And if we just zoom back out, I mean, you can see we've had these upward trend moves before, either right at earnings or right after earnings. You know, the difference in this one, we're moving up before earnings, almost the whole month of October. And the other one is, if you look, where we start off here, we start about $18 on that run. We start off around 22 on that run, and then we're around 23.50 when we started moving up on this run right here with earnings coming next week. And so we're a little bit in uncharted territory here to have this run start this far before earnings. And so we'll have to see how it's going to react and play out. But, you know, some other news that came out this week was another partnership that Palantir did, which is, you know, I'm not shocked at all, but I think it's a good partnership for them. And this is a partnership with Alex Partners to help clients unlock the value of their data, which Palantir is big on. And what it's going to focus on is innovating the next generation software-based business models on top of their core operating business and navigate critical disruptions in their businesses, including supply chain breakages, which is huge right now, consumer behavior shifts, unanticipated business outages, and digital disruption, as well as develop fundamentally new ways of interacting with customers and employees. And here is the industries that this company is in, which is quite a bit: aerospace, consumer products, energy, retail, real estate, financial services, healthcare, which kind of crosses right over what Palantir is in. And then if you look at the services, obviously, investigation, disputes and risks, mergers and acquisition, technology and digital, performance improvement. And so I think that's another great partnership for Palantir. It's right up their alley, especially anything to do with supply chains right now is a huge one. You know, and that's the one thing Palantir shouldn't have to worry about when it comes to forecasting. A lot of these other companies you see, supply chain bottlenecks are just killing them with the increased costs and stuff, but that's actually right up Palantir's alley. And so hopefully it will increase business for them, because I really can't think of another company that would be better suited to help deal with the supply chain crunch we have, which is supposed to go all the way through 2022, some people are projecting. And so we'll see. And I'm really, you know, eager to hear about that on their conference call and stuff, to see if that's help them gain any more customers or business. And so, you know, the things we're looking for is, you know, we're sitting here at 49% year-over-year growth so far. This one they're projected to be around 385 million for the quarter. That's only a 2% quarter-over-quarter growth, which is actually pretty low. But we're looking at fourth quarter guidance to be anywhere between 400 and 410 million, depending on what source you go to. But that's usually about right. I mean, their increase is normally 25 to 30 million each quarter, it seems like. And so obviously projections for the future are supposed to be huge for them. And so, you know, we're also looking at what? Government versus civilian contracts. We're looking at, obviously, I expect the enterprise revenue or customers to be increasing because they got their Foundry for Builders looking at. Now we got Foundry for crypto. Also a Palantir Apollo, I believe it is called, which actually is for government and enterprise customers and stuff like that. And so that's something everybody's going to be paying attention to as well. And let's not forget, they hired 50 to 60 sales representatives in the first and second quarter. So let's pay attention to how many they hired in the third. And also, we should start to see that pay off. I want to see, you know, what they, you know, the bang for the buck, what are they getting, and how are those sales representatives helping them actually market and sell the product as well. And lastly is the billings, which is nothing but revenue plus change in contract liabilities. And so it was around 362 million in the first quarter, 379 million in the second quarter, and we're expecting somewhere in the neighborhood of 400 million or more in the third quarter, and so that's going to be a big number. A lot of people are going to be looking out for, and so I'm expecting good things. They've beat the last, I think, 3 quarters, right? 3 or 4 quarters they beat pretty handily. They actually did scale this one back and said it was seasonality. I don't even know what that really means for a company like this, and so maybe they did expect slower demand coming into this quarter, so we'll see on that. But usually they sandbag, which means it's pretty smart, and it's better to under promise and over deliver. Tends to pay off for them, but we shall see. And the other thing to look at is it going to be a sell the news event? Because like I've showed in the chart multiple weeks now, you got this run up going into it. They usually don't have that happening, and so it's going to be pretty interesting to see. And it's all about the forecast, really. I mean, I think they're going to hit numbers, but it's about what are they forecasting for the fourth quarter and then going into 2022, because the expectations are pretty darn high right here. And another thing you got to remember is the analysts do not like Palantir. I think they only have one buy and a whole bunch of holds and maybe a sell. So, the analysts are not going to help this company out. They do not like Palantir. And so, that's a whole other thing they have to deal with when they go into earnings that most companies do not have to deal with. Okay, guys? So let me know in the comments what you're expecting. I'm expecting a beat. I'm expecting a move up, but I would not be surprised at all to see a sell the news event just because we've had this nice little run up over in October and first week of November here. And so, let me know what you think. And so now let's go into SOFI stock and what's happening, and let's go into the chart first. And so looking at SOFI chart, you see another nice big run up for the week since my last video of almost 12%. And you see on this one right here how much it respects these support and resistance levels. It crossed over the 2167, what was resistance, now support level, and you can see we've been above this about 3 times and failed and came back down. And so holding is tough, but we chart the next resistance line for it. If it continues to move up, it's around 2460, somewhere in there. And so just below shy of 25. And you can see, if you just look right at it, it totally consolidates, then moves above resistance, makes a support, consolidates, moves above resistance, turns it into support. And so this is what we're looking for this week, especially when we hit earnings. I think it's going to continue to go up, by the way. And one reason it moved up this week was because of Lending Club. They reported earnings and just killed it, right? And what is one thing these two have in common is Lending Club has a bank charter, right? When they attained that bank charter earlier this year, it absolutely transformed their business, right? Because it just gives you so many different ways to get cheaper funding, streamline operations, and save on loan origination costs. And some people really believe they're going to announce this during the earnings call, and that'll be huge if they did that. I mean, I think you see big pump in the stock price if they did that. I don't know, though, because of the lawsuit. I don't really know how they could announce that until that lawsuit is settled, which I brought to you a couple weeks ago. But you never know. And so I think, if I had to predict, I think they're just going to give some updates on it. I'll be surprised if it actually got signed. I think it would have leaked out by now if it did. But who knows? But that's going to be the big one, right? If they get that, sky's the limit. If they don't get the bank charter, that's a huge problem. Okay? And so, their CEO has come out and told you the benefits of getting that bank charter. Many of us, like me, have told you the benefits. Lending Club has absolutely benefited from it. They got theirs early this year, as you can see. And it's just a win-win-win, okay? And so that's what we're looking for on that one. The other thing that actually moved the stock down some, I actually had it trading sideways because it did dip as soon as this came out, and I told you about this last week, was them announcing the redemption of all outstanding warrants. And so, of course, all this is basically people say, here's my warrants. They create new shares to give to these people, which dilutes current shareholders. They have to do a 30-day notice on this, obviously, so they have up to the December 5th, I believe. They will check me on that. But I believe that's when they got up to. So this will be going on over the next 30 days. And that does not help the stock price. So, of course, that just kind of creates more resistance to it. Okay. And so that's just what happens with every single SPAC out there. Every one of them does it. The share price, obviously hurts when that happens. The good news is for them is they know they're on an upward trajectory. They got momentum behind them, earnings, which should be good coming up, hopefully. And so that's kind of helped the sell-off right now. If we were in, if we didn't have earnings coming up, we weren't in this upward trajectory, you'd see a major sell-off most likely, which could still happen over the next 30 days. We'll have to wait and see, okay? And so, the other thing, which I told you a couple weeks ago about, when you look at that chart, the reason why it's moving up like it is because it's not just us buying, not just the retail investor. You can tell it is institutions increasing or starting new positions in SoFi. You can look right here on Fintel and actually see this, the SoFi institutional ownership, and you just see the purchases that were coming in, reported the first week in November, I would say. And you can see, you know, 300,000, that's a new one right there, 207,000 shares, got 142,000 shares, 127,000 shares, another 40,000 shares, 710,000 shares. And the other thing is, I'll keep track for us here, is over at TipRanks, you know, that new site they have now where it tracks the website traffic, which is huge for SoFi. It's how they get their business. And we can see in the quarter that hadn't been reported yet how much they're increasing the traffic to their website. And we can go down here right here for the box score, and you can see monthly growth is 13%. Quarter over quarter is around 36%, and then year to date around 44% increase in their website traffic. And then if we scroll down and see where it's coming from, you can see that most of it's from the United States, almost 94% of it. And then you got Canada, United Kingdom, Serbia, and all different kind of countries: Germany, India, Netherlands, Singapore. And you can do it for any company's website on TipRanks. If you want to sign up for it, links down right down the bottom. 30-day money-back guarantee, so you can give it a shot. But it kind of gives you a projection to say, how are we going to be looking this quarter, right? Because this hadn't been reported, and if the website traffic is decreasing, that is not a good sign for the company. But in this case, their website traffic is increasing, which means their customers are probably increasing as well. We'll get to see on that, and so give it a shot. Let me know what you think. And so, you know, the last thing I was going to bring you on SoFi was I like to get independent, you know, opinions, things what they see in the charts, trading, you know, opportunities, things like that for you guys. And so I saw something on TD Ameritrade's YouTube channel, which I ran across. And so here's what they think about SoFi, so you don't think I'm crazy and, you know, I'm just trying to push it to go up or something because I own the stock. You know, here's what these guys think, and you get an option strategy as well from people who are, you know, experts at options. So give it a shot, see what you think here.
What do you see here in SoFi?
Yeah, so, you know, from a charting standpoint, the recent swoon up is somewhat of a cup and handle breakout play. But what's really important here is this $25 price level. Now, the initial resistance has come in around $23.75. That was the June 18th high here, and it's pretty much bricked almost to the penny to the downside. So really, I want to see SoFi hold this 21-22 range, retrace back up to this price level, break out above 25, and we have this trade formation. It's called a W that I have in my program, and generally speaking, the W is usually a launching point when we break that mid peak. That mid peak was right around that early June, late May peak high at 25s, and I believe that's that breaking point. Once we get above that level, I don't think the 52-week highs hold a chance. I believe that SoFi will be testing 30s here.
All right, that 52-week high at about 28.26 there on that chart. But Ben, give us your take here on the charts.
I think this one's setting up for some more upside momentum here. Certainly that has been the trajectory. Let's take a look first and foremost at the intraday intermediate time frame. You can see the well-defined trend, and you know, we were just talking a minute ago about the move higher that we're seeing in terms of that big breakout as far as AMAT and what we're looking for in terms of consolidation. Well, look what just happened in terms of SoFi. We just broke out up and through that $20 to $21 range that we were in. Here's the hourly time frame. This is this pattern repeats itself over and over again. It's very bullish. You can see the high conviction up and then the acceptance. This is what I was talking about in terms of what we want to see in terms of AMAT. A quick look at the daily time frame as we move away from that intraday look. I can see what Charles has his eye on in terms of this kind of double bottom pattern forming, as I like to call it. But the W, it certainly does look like that. But a couple hurdles to get up above here, Tom. We're talking 25. That's the first level. I can see what Charles has dialed in on that, as mentioned. And then ultimately they want to see this thing up above 28. But some good momentum here into some key resistance at this point. We're looking for some continuation here, some follow through.
Yeah, catalyst might be that November 10th earnings report, but we've got an option strategy here that we'll take a look at to back up Charles's take here on SoFi, where we're going to go out to give ourselves some duration, and we're going to buy a call vertical in here. We're going to buy the December 22.5 strike call, which is currently at the money, and then against it, hitting that price target that Charles mentioned at the 30 strike, we're going to sell that to reduce our cost entry point on this bullish call vertical. If you pay roughly about $1.90 debit on that, that's your entire risk on it. But that spread could expand to $7.50 to the upside if it does reach the 30 level at expiration in December, and that's about 42 days away. Your break even about 24.40, so not too far above the current share price.
And so the people over at TD Ameritrade obviously think this going up as well. And so again, it has a lot of momentum behind it. A lot of it's just going to depend on earnings. Obviously the last earnings drove it down. We shouldn't have any surprises this time, I don't believe. And so we'll see, but it's all about that, you know, forecast and whether you hit the numbers or not. So we shall see. If you do get in that options trade, let me know in the comments how it works out for you. I'll be looking at it Monday myself. And so hopefully you got something out of that and something out of the Palantir as well. But I'll probably put a video out. It's probably maybe in Thursday on both the companies, just because that way both of them have earnings, and you guys tend to like me reporting them both at the same time. And so obviously please hit that like, subscribe button if you got anything out of this. I really appreciate it, guys. And don't forget to hit that link down there in the bottom. Sign up for a BlockFi account to earn 9% on your stable coins, 9.5% on your Tether, and 4 to 5% on your other cryptocurrency, as well as earn the 1.5% back on Bitcoin for every purchase you make on that credit card, guys. I will see you later.